Nathan Sheets, Global Chief Economist at Citi. Thank you very much for joining us at Economy Middle East. How can banking leaders contribute to the new economic agenda being discussed here at Investopia?
I think the reality is that this agenda necessarily requires substantial financing. I mean, think about sources of financing in the global economy. Inevitably, that means the global banking sector, that global banks are providers of capital to new businesses and for investment directly through bank loans. But the banks are also critical players in global capital markets, facilitating those markets and making markets in those places. So kind of bottom line, this agenda will require substantial funding. And whenever you start talking about funding, necessarily you start talking about the global banking system.
Interesting. Thank you. So the UAE and the GCC are now navigating away from oil and boosting their non-oil economies. In what way has this changed the global landscape?
Yeah, I think that this is very consistent with what I'm seeing in the global economy more broadly. And that is that we're seeing an ongoing shift from a goods-intensive economy into a services-intensive economy, but even more precisely into a data-intensive economy, into a tech-intensive economy. And as that happens, it's imperative that the global financial system evolve and adapt along with it. By the same token, that evolution has critical implications for the demand for energy. It's likely to come in different ways, in different forms, with different end users, and be provided through new and evolving means, including over time through renewables. So kind of bottom line, my sense is that this shift in emphasis in many of the GCC countries you described is very consistent with some of these broader trends that I'm seeing in the global economy.
It's very interesting. What changes will the banking industry have to make in order to meet the demands of these new growth sectors?
You know, this is a really interesting question. And I think what we've seen over the last, say, 15 years is a significant change in the global banking system, where now it is more cautious, it is more capital intensive, and fundamentally safer than it was before the global economy faced the global financial crisis 15 years ago. But now as we move from kind of a goods intensive world more in this services and data intensive world that I've described, again, it's going to mean another transformation, and specifically, collateral. Collateral in a manufacturing firm is a very different thing than collateral in an IT firm. And I think it's going to require the banks to think through some of the processes about how they're able to get the confidence that they need to continue this critical role of lending. And similarly, I think the policy framework in many countries, including the regulatory framework, is going to have to continue to evolve in response to this transformation that's gradually occurring, but nevertheless occurring before our eyes.
Fascinating. Thank you very much for your time.
Thank you.
Thank you.